Hello and what is going on, lovely people of the internet? It is Hootmoney here with another video for you guys. Today we're going to be talking about Progenity stock, PROG, and we are going to be discussing what exactly happened yesterday because Ortex reported minus 36% decrease, so a huge massive decrease in short interest, as well as about 12 million returned shares. So on the surface, these statistics might look a bit intimidating, look scary, right? It might look like there was a lot of short covering and there wasn't a huge price move, so why would there be so much short covering? These are the questions that I'm going to be discussing and hopefully have a good solid answer for you guys, and then we can see where we can go from there. So if you guys don't mind leaving that early like on the video, it's always very highly appreciated. Subscribe for more and hit that notification bell down below because we go live at 9 a.m. Monday through Friday, 30 minutes before market open each and every single day. So definitely hit those down below, but without further ado, let's just get right into it. So first and foremost, we're gonna take a quick look at the chart because in my video yesterday the market was still open, so now we got a market close perspective, and it's gonna be really brief because this is not the point of the video. So here we have two different perspectives. You can have the bull perspective or the bear perspective. Honestly, either of them could play out, especially from the technical analysis standpoint. You guys know exactly how I feel about this stock though, so just take it as a grain of salt because you know I think this stock is going to continue to go up. Anyways, we have it right here. Boom, we're on this 200 moving average. Now the problem is that this is a lower high, so we got a lot higher high right here, and this is obviously a lower high. So when you have lower highs and you're forming like this uptrend, it's not the best scenario, right? Because we go up here, right? This is a new high for when this was actually occurring right here, this price action. Then we get this high. This is another new high. So it's a higher high, right? And then we get another higher high. And then we get another higher high in the next price jump. So it's just a continuous uptrend bouncing off the 200 moving average, higher high. Well, what we got here was a break below the 200 moving average and a lower high. We're right back on the 200 moving average. So pre-market Monday should be determining where exactly we're going, whether there's more downside or if we're bouncing off that 200 moving average and there's more upside. Now, obviously this isn't what we're mainly focusing on this in this video, but there's obviously two perspectives here. We can bounce off, we can continue this uptrend that we're in, or we're forming lower highs. We've already broke through that 200 moving average once, and it means more pain ahead. You guys choose which perspective you guys want to see. I still think we can have a massive short squeeze. I just wanted to show you both different perspectives. We also got increasing volume yesterday, so we had more volume than we've had in a while on this stock, so there's more eyes on this and obviously more potential buyers in Progenity as well. Anyways, that's all I got really for the technical analysis. If you guys wanted to check out this charting software, boom, it's WeBull desktop through the promotion on the screen right now. You can get up to $2,300 in free stock as long as you deposit a penny on their platform. So that's one single penny. Boom, you can win up to $2,300, and they have amazing technical analysis. I mean, you see all the technical indicators I use. They have financial statements, they have analyst ratings, level 2 data, order books, pretty much everything you need to do a full complete financial analysis. And they also have iOS and Android, so check that out if you guys want. The links are below in the description or in the pinned comment section as well. And yeah, let's just get right into the next thing. So what we have to go over is this Ortex data. Obviously you guys see it right here, minus 34% short interest change. It's pretty insane. Almost 13 million shares were returned. So would that mean that shorts actually covered on Progenity? Well, it doesn't really make sense, because if we go 2 days back, this would imply T+2. This is the price action that we're looking at right here. Obviously there's no short covering. There would have been a huge price bump, and I don't think there was a lot of short covering, and we'll get into that. We'll get into exactly why. But before we get into that, I did contact Ortex, and I'm going to explain what they said, and we can go over the Ortex charts in just a second, and we can just see, we can visualize it. So we're going to read through this and then we're going to visualize it. All right. So firstly, I'd like to mention that as it says in the help screen for live short interest, that it is transactional and potentially subject to change. So this whole thing right here is about them saying that the numbers aren't 100% accurate. It's based on loan data, not actual short interest reporting. So they're just estimates. That's what they're saying right here, and the estimates could be wrong. Your assumption that they covered 12 million shares is based on the fact that those 12 million shares were sold short, and that's not necessarily true. So these the 12 million returned shares, they're not necessarily sold short, right? They could have just been put on loan for whatever reason, and it would have added in short interest on Ortex that didn't actually have short interest, because Ortex is going off of these on loan estimates. The borrowed shares are just assuming that they are sold short, but they don't have to be sold short. Right? Okay. I hope you guys understand. If you don't, leave a comment down below. I'll try to answer it, help you guys out. Anyways, looking at the recent history with stock lending and short interest data, I can see that on September 30th, NASDAQ reported that the short interest was 10.7 million and shares on loan were recorded at 11.7 million. So that's about 1 million shares more on loan that weren't actual short interest on that day. By October 15th, on loan increased to 32 million and an increase of 21.1 million. So there's another 21.1 million shares now on loan. They had initially estimated 30 million short interest, but on this occasion, they were significantly out. So they got it actually wrong, because when NASDAQ reported it, short interest had only gone up by 22.9 million, an increase of only 12.2 million. So instead of an increase of about 21.1 million, there's only an increase in 12.2 million shares of short shares that were actually being shorted. So they were off by about 9 million shares. Those shares were put on loan for whatever reason, paying a 70% cost to borrow, but they were not being shorted. And we can see that. We're going to visualize it in just a second. All right, so there you go. It's about 10 million shares that were on loan, not being shorted, paying that 70% cost to borrow. The borrowing then subsequently increased to 36.6 million and a cost to borrow of over 100%, and held at a similar level until today, when shares on loan have apparently dropped by 11 million. How many of these 10 to 14 million shares were sold short, and how many were held or just relent? We can only estimate, but the volume last week peaked at over 250 million, so there is scope for some of them to have been sold short, although we have no insight into the strategic decision making of the hedge funds. If they had sold any of the 11.6 million shares returned today, they would have had to repurchase them prior to Thursday, so that would have settled today at the latest. So it would have had to been bought back prior to these two dates, right? So the whole downtrend is when they would have had to been bought back, which makes absolutely no sense. I mean, if it's trending downwards, obviously shorts aren't covering. So that doesn't really make sense. So likely the huge amount of returned shares were not sold short is essentially what they're conveying here. The volume for Monday to Wednesday was roughly 120 million, so there was a scope for shares to be purchased just on those days. Volume for the last 3 days of the week was even higher, over 215 million. If the shares were not sold short, they were already holding sufficient shares to return the bulk of those 11.6 million shares without having to cover. We will get a slightly clearer picture what is going on Monday. They're going to have more consolidated data, yada, yada, yada. All right, so here's the Ortex data. Again, minus 34% short interest and about 13 million shares that were returned. Now, the estimated short interest we have on this chart, and also the shares on loan. But you can also see right up here, the shares on loan was about 33.98 million, and then as of Thursday, the estimated short interest was about 23.7 million. So you can already see there's about 10 million extra shares that are on loan that were not currently being shorted. So again, that's roughly 10 million shares that are on loan paying over 100% cost to borrow that are not being sold short. And you can see right here on October 25th, their estimated short interest went down from about 32 million shares all the way down to 24 million shares in a day. And no, it was not short covering. It was just the difference in the actual reported short interest from NASDAQ that we only get every 2 weeks. So because of that, there were a bunch of shares that were put on loan that weren't being sold short, and that's what you can determine from the new short interest numbers from NASDAQ. So what I'm assuming is what happened is that maybe a hedge fund wanted to short the stock. They were like, oh, maybe 70% cost to borrow. That's not too much to pay to short this stock. And then potentially they decided, oh no, we don't want to short the stock anymore. This cost to borrow is way too high at over 100%. Let's just return these shares. Now there was only ever about 10 million shares that were on loan that weren't being shorted, and we got about 13 million shares returned. So that could potentially mean that about 3 million of these shares returned yesterday were actually shorted stocks. So what is this going to do for our statistics here? We've got the cost to borrow at 92.65%. It's very expensive to borrow the stock right now. The utilization also at about 100%. Now that there's all these returned shares, perhaps the utilization might actually drop down and there might be an additional amount of shares to be borrowed. If that's the case, they have tons of ammo to actually continue to drive down the stock price. Now, we're not going to know for sure until Monday, but obviously I'm going to be paying attention to that utilization number, because if it does drop down significantly, we'll be able to tell if the shorts have a bit more ammo, and also likely the cost to borrow would also drop down significantly. And that's how we'd be able to tell for sure if shorts now have about 13 million more shares to short in this stock. And even though that is a possibility and that would not look good for the short-term outlook of Progenity, the other possibility is that whoever did originally put these shares on loan, they probably wanted to short it eventually, but then they realized, oh, this isn't a good idea. And their thought process behind that might be that a potential short squeeze could happen in Progenity and they don't want to be caught up in a short squeeze. So we'll see what happens. Those are the possible scenarios, and that's the best explanation I can give on what exactly happened on Friday, getting all of those returned shares. I do think it potentially could be a bit dangerous if this does mean that shorts do have more ammo, because we did break that clear uptrend that we were in before, and obviously they're going to be using that break in an uptrend as just a sign of weakness for Progenity longs, right? So that's the one potential risk that I'm seeing from all of this. But at the same time, whoever put those shares on loan clearly didn't want to short the stock, because there was no significant price change that we got about 2 days ago before Friday on Wednesday. So they likely didn't short the stock. And if they didn't short the stock, why are they returning it now? They literally just borrowed the stock, had to pay a high borrow fee, and then return them. I think it's because they don't want to short the stock, because they probably now see a bit more upside in Progenity. So there's two ways to look at this, obviously, and I wanted to present both of them. So it wasn't just me just perma-bulling this saying it's going to go up, because if I do see a risk, I'm going to say it. That's just how I roll. If you don't respect it, that's on you. That's what I do. And yeah, that's about it. I hope you guys have enjoyed the video. I enjoyed making it as always, and if you guys did, leave a like on that video. Always highly appreciated. Number one thing you guys can do to help me out here on this channel. Also, hit that subscribe button down below and hit that post notification bell as well. That's about it, guys. We're live Monday through Friday, 30 minutes before market open each and every single day, 9 a.m. Eastern Standard Time. So come on through, join us. We do jumping jacks. We have a good time. We have a lot of fun. Anyways, that's about it. If you guys wanted to check out WeBull, links below in the description or in the pinned comment section. Again, up to $2,300 in free stock just for signing up, depositing at least $1. So that's about it. I'll be seeing you guys next time. I hope you guys have enjoyed and have a wonderful weekend. We're gonna be back here on Monday. See you guys later. Peace.